Hey everyone, welcome back to another video on the channel. The portfolio is currently sitting at $7,374.60. For the day, we are down $49. For the week, we are up $15.56. For the month, we are getting beat up. We are down $416.33. And for the 3 months, which is basically the all-time chart, we are down $221.23 since May 31st of this year, or 2.91%. So yeah, we are getting destroyed right now, guys. The whole market is pretty much the past month. I should have really recorded this video 2 days ago because you can see I was doing pretty good at that point. Just go back a little bit here. So yeah, we hit a low recently, and I know I haven't made a video recently. I've been very strapped down with college applications, and I'm starting my senior year in high school, so I've been very busy. But I'm going to try and get more videos out to you guys. I know I said that last video, and then I didn't upload for 2 weeks, but things are starting to wrap up a little bit more, so I should have more time. But yeah, if you see, we had an absolute low here of negative 371.29 in the portfolio, or 4.89%. Which is pretty brutal. And then we did have a really nice climb all the way back to only being down 1%. So we were doing very well, climbed all the way back out of that, and obviously we're at another downturn here. But if we look at the SPY, which is kind of my big comparison tool, for some reason they took away my comparison tool, because I would just show you this here, but they for some reason removed it from my account. But yeah, if we just go back to the last month on SPY, you can see SPY at a low point was down 6.5% for the month. So, you know, it's not just us. You know, the whole market is getting tanked right now. We had that really nice relief rally, which you saw in my portfolio graph, but now we're coming back down just a little bit here, as you can see. So yeah, we are getting kind of beat up right now, but just as usual, still selling calls, still selling puts, still collecting dividends. Basically just raking in cash and premium all the time. You guys know the drill. So yeah, we're still doing that. I can go over some new positions, my current positions. Since the last video, I ended up closing out all of my calls that were for, I believe it was for the end of this month I had calls open for. I ended up closing all of those at a profit and basically rolling them in, which I know sounds very weird, but I essentially rolled all of those positions to an at-the-money call for next Friday. And the reason for that is because if we go to our margin here, you can see we're currently using margin, which is not what we want to be doing. The reason we're using margin is because, as I was telling you guys, we are putting pretty much the entire portfolio into SPLG, which is just the S&P 500. And we're up to about 78 shares right now. But we're putting about $50 a day into this fund, and so obviously holding this as well as all my other big stock positions, as you can see here, if we go to equity, you can see holding all these positions really adds up. So we are actually using margin, which I said when I started doing this strategy, we do not want to be using margin. So the reason I sold all these at-the-money calls is so that hopefully we can get some of these shares called away. And for a minute, it was looking like they were all going to get called away, but then obviously we had this downturn. And luckily, I sold all these calls pretty much near the peak of this relief rally. I want to say it was around the 11th that I sold all of these, and so these are now all in profit, as you can see. But that's kind of the plan. I'm just going to keep selling these at-the-money strike calls for probably weekly to bi-weekly until I can get rid of some of these shares. I don't want to get rid of all of them necessarily. I only want to get rid of at least one of these positions, hopefully just one of these two. I do really like Key and T still. I only really have a problem with these two, which have been doing nothing but going down pretty much since I bought them, unfortunately. But it happens. And this is actually the reason why we're buying into the S&P 500, because I just feel like I'm not great at picking stocks, and it's not necessarily that, it's more that I'm too quick to jump into stocks, if that makes sense. You know, I'll find ones that I really like, and I'm just really quick to jump into them. I'll either just buy them outright when I like them without selling a cash secured put, or I will sell an at-the-money cash secured put and get assigned at a price that I really shouldn't be getting assigned at. It's really just a patience thing. It has worked out with Key, obviously. But I mean, for all of these positions that I actually am holding, I wasn't necessarily assigned on a put in the conventional way, which I think is why these positions are down so badly. But the overarching idea is I think I would just be safer holding the S&P 500 and selling calls on that, and then selling puts on the side using margin, because I just think that's the most safe strategy until I can learn more about evaluating companies, is my opinion currently. So that's the game plan. And as you can see, I don't remember what I was at the last time I made a video, but you can see we're currently at 78 shares of SPLG, which is equivalent to around 4 grand in the S&P 500. You can see we're up all time on this, and at one point we were up around $60 to $70 on this position. And in addition, at one point we were down pretty largely. So yeah, this is really just fluctuating, and I'm just dollar cost averaging, buying 50 to 55 a day. You can see I have this daily buy, which has been going for a long time. I'm not sure if it'll tell me here. Okay, so this one started on September 22nd, but if you guys remember, originally I had this daily buy on SPY and not SPLG, and I started it around the end of August. So we've been dollar cost averaging into the S&P 500 for about 2 months now, 2 or so months, and it's been going very well, I won't lie. I do really like this plan. I like the security that it gives me, and it just feels like something I can trust and sleep at night with, holding this in my portfolio as such a large position, as opposed to something like an MPW. And I just think it's a smart route to go down. So we're going to keep buying this every single day. That's the plan. And like I said, we're really trying to get rid of hopefully one of these 2 positions through assignment of a call. That way we're not going to be using margin. Obviously this isn't a lot of margin. It's not going to charge me anything crazy, but as we keep buying SPLG, this is going to build up over time. So like I said, just hoping to exit these 2 positions, and that is why I'm selling these at the money calls, and also just to collect more premium and to really hedge my downside in this market downturn. But yeah, so that's the whole situation with the calls. These are all up currently, and if we go to the portfolio spreadsheet here, you can see close out all the other covered calls for a profit. So that's great. Moving on though, we also collected a dividend on NPW since the last video, which is great. $15, so that's always great, lowers our cost basis just a little bit. For the month, we've made about $42 of income so far, and obviously that doesn't include all of these, which expire next week, and you can see we still have quite a lot of money left on these contracts that will be put into our account, so we should be able to beef that number up from 42 to hopefully around 80 to 100 by the end of the month, or probably a lot more because we'll be able to sell another call for the week after this one. So yeah, our monthly income is looking pretty good. Moving on though, we have some credit spreads, and I told you guys I was looking at a more rules-based approach to trading, and I started that up, and it's actually been going very well. So if we look here, we'll go to short puts first. I'm just using some basic rules. I watched a lot of Tasty Trade videos, and I'm using some basic rules from them, along with just some, technical indicators and such, and it's been working out pretty well. The first trade I opened up was on Palantir, and I opened for a credit of $39, and I bought back for a debit of $19 over the span of 1 week. So a nice 50% profit on that contract pretty quickly too, and I just think it was a really nice trade that I made. If we go over here, you can see I entered here and I ultimately exited here. So I really like this rules-based approach because it makes me feel a lot more confident in my trades, and it feels like I'm not just throwing trades at the wall and seeing what sticks, because I was doing that a lot before, and it ended up getting me into some bad positions, and so that's why I'm kind of going with this approach. Same thing for spreads, and our first spread went very well. We had the Visa spread that I talked about in my last video, I want to say. Made $6 on that, and then we sold a call credit spread on T and SoFi, both of which ended up getting closed out early for a loss, and that's because both of them ended up rallying pretty strongly during that market rally that we had around here. But regardless, we have a Ford one that I believe is, yeah, the Ford one is doing good. We're actually almost ready to close this out for the 50% gain. So that, along with the Visa play, cancels out a lot of this loss, except for this one. But then in addition, I'm selling a put credit spread on SoFi, 2 of them actually, which I can show you here. And the point of these, I was watching, I don't know if you guys watch this guy, TJ the Wheel Deal, I'm sure you do, but he was talking a lot about put credit spreads as a way of selling cash secured puts without putting up as much collateral. And that got me thinking, so it got me to the idea of selling a pretty close to the money put credit spread as a way of selling a put, but with less collateral. So I'm selling this put, my max loss is $39, and in the worst case scenario, here's my perspective. In the worst case scenario, I can sell these puts for a profit, which puts a profit into my account, which you can see I already have a profit on these. It puts a profit into my account, and then I can end up just rolling the short put with no long leg out for a credit. Because I have enough money to buy 100 shares at this strike price, I can sell a short put by itself at a later date for a credit in case this position goes against me to recoup that loss. But the maximum loss on this trade is $39. So in the worst possible case scenario, SoFi drops to, let's say 6, I'm only on the hook for $39, and then I can roll this put position out a month and collect that $39 and then end up without a loss at all. So my idea is kind of that when I want to sell a cash secured put, maybe I should go into it with a spread, and then if that spread goes against me, I convert it into just a cash secured put at a much lower strike price. So I really like that idea, and I'm just kind of experimenting with that here. And yeah, so that's a new thing I'm trying out as well. If we go down to the debit spreads, I bought a second debit spread. Let's see when that was, because the price did dip quite a lot. That was the first one, and then I bought a second spread at $40 for the spread, which was a pretty good trade, I'd say, because it's currently sitting at $50. So that lowered our spread cost basis to around $48. So we are up on this currently, and this past week we were up a lot more. You can see it was at 58, so we were up another 16 at one point. But you know, once again, this is for 2025, so this is a very long-term spread. SoFi has earnings this month, so if SoFi ends up popping off this month, you can see this was the last earnings report. SoFi popped and these spreads went up to 94. So if something similar to that happens, or obviously later down the road, if SoFi just steadily increases in price over the next 2 years until this contract hits its expiry, then these will go up by quite a lot of value. This is just kind of my way of getting exposure to SoFi without actually having to own shares, if that makes sense. Because our maximum loss on these contracts is only that $50 that I put in, which I'm comfortable with, and I'm hoping to hopefully buy another one of these spreads if it dips back into the 30s again, which you can see it did recently, but I didn't catch it. I bought at 40. But yeah, that's the idea with these. Still holding on to those. Moving on down, we got SPLG obviously at around 4K now, which is pretty awesome. Once we get up to 100 shares, we can start selling covered calls on this, which I'm really excited about. If we go out, let's see, December, for example, these are very long dated calls we'd be selling, and we'd be selling at very conservative strikes. If we look at the past 3 months on SPLG, or I guess the year to date, you can see it peaked at 53.81, but by owning SPLG as opposed to SPY, you can see if I go out to December, I can sell a call at that yearly high and collect $25. So by just holding the shares of the S&P 500, I can sell at the all-time high for the year, the 52-week high, and collect $25 just for free. And it has a 17 delta, and you can see SPY would have to rally 6.5%, putting my long position of shares into a ton of profit on top of making this 25. So that is the reason I converted my SPY position into SPLG, because I'm able to sell these calls and trade options on it. And I think, I don't want to be getting rid of these shares, which is why I want to be very conservative with the strike prices and dates that I'm picking, because I don't want to lose these shares, but I do also want to generate income on them at the same time. So that's the reason why we're in SPLG, because it's a very safe, low-risk play, because all I'm doing is holding the S&P 500. You can see the all-time chart here says it all, honestly. So it's a very low-risk play. I kind of know the maximum downturn we could take by holding this, so I'm very comfortable with holding this, and it generates income. It also has a dividend yield, very low, but regardless, once our whole portfolio is into this, that dividend yield will probably be around $80 a year, which is an awesome boost to our income. So yeah, that's the idea here. We're almost at 100 shares. Once we get the whole portfolio into here, we'll have around 150, 170 shares. So we will have some extra shares left over, an odd lot, if you will. So we won't be able to sell 2 covered calls, but that's also a good thing, because we can sell those covered calls and also still have shares in case it goes past our strike price and still make money. So that is the idea, guys. I'm very happy about this position, and I'm really excited to get us up to 100 shares. Past that, though, let's see, anything else? Still holding the same old in terms of these shares. LABU and MPW are at some extreme lows right now, which is honestly insane. If we look at LABU here, this thing is hit 308, which is honestly unbelievable. I thought the floor on this thing was 450, and here we are. So this right here, so you can see, look at this loss. This right here is why I'm buying the S&P 500 and not looking back, because of this exact reason. I don't think that I'm terrible at picking stocks, but I do think that I'm impatient, and because of that, I just want to hold the S&P 500 because I don't trust myself to not continue to make these plays. You know what I mean? I'm not sure if that makes sense, but I just think long term I will benefit and have money, like much more gains from just holding SPY and selling calls on that, as opposed to trying to stock pick individual stocks and ETFs and having to manage it all the time. Is the general consensus. And we obviously had a similar situation on MPW, worse even. You can see 41% loss. I think we bought around here. And once again, I think it's just a case of that eagerness to get into a position that I really don't know enough about to be getting into it, if that makes sense. You know, I saw this price dip and I saw the dividend yield and the premiums available, and that kind of caught my eye and might have blindsided me a little bit from the underlying issues with this company. And I think that's a trend that I see over the course of my trading, since I've started trading, is just being blindsided and sort of tunnel visioned on one thing, and it's ended up leaving me in some pretty bad positions, like this one, for example. And you know, all in all, that is the reason why I'm buying into this, because this is something I can hold forever and not have to worry about, while I can still, in the background, with the margin and these shares, I can still trade options just as I would otherwise and still have the enjoyment from doing that. So yeah, a little bit of a rant there, but I just wanted to cover changes being made in the portfolio, like the rules-based trading, to really restrict the things I can do and really try and keep it more consistent and profitable, as well as the conversion of all my cash into the S&P 500. So yeah, those are all the changes that I made. These are all my current positions, and hopefully I can start getting you guys weekly videos, just like the old days. I'll probably, if I do that, I'll probably make them shorter, just because these videos do take a while to record. But yeah, that is the overarching idea. If you guys have any questions or comments, please leave them down in the comments. I love reading your comments and talking to you guys, because I know I can ramble a little bit when I get into talking about this stuff. You know, it's the stuff I'm passionate about, so I tend to ramble and go on about things sometimes. So hopefully you guys are okay with that. But yeah, thank you for watching, and I'll see you in the next video. Goodbye.